Assalamualaikum. I will present about ethics in accounting issue. This video is the individual presentation for the coursework Financial Accounting and Reporting 5. This video is prepared to Sir Muhammad Sharofi bin Haji Ismail. So, let me introduce myself. My name is Ismail Binti Haniff. My matric number is 272276. Then, let's start this topic. Before we go further to the topic, I will tell you what the guideline or what to present in this video. It contains introduction, meaning of ethics, the need of ethics in accounting, ethical responsibilities of accountants, earning management and ethics, code of ethics, problem issue in accounting, and accounting scandal. These are the outline for the topic. So let's move to our first contents, which is introduction. In this introduction, a study of accounting ethics is required as it is an essential aspect of the roles of auditors and accountants in the preparation of financial statements. Generally, the term of ethics refers to the moral of a code system that strongly offers the criteria for distinguishing between wrong and right, identifying crucial and significant aspects connected to the ethical motivation of management accountants is vital in the organization management. It must be used by organizational managers and decision makers in deciding the best course of action that they can take to guarantee compliance with ethical standards in the compilation and presentation of financial information. Okay, let's move to the meaning of ethics. Before that, what is ethics? Ethics, in my view, is someone's behavior that is to differentiate doing the wrong and the right thing. So, that is my viewpoint for what is ethical. So, what is the real meaning of ethics? The meaning of ethics in accounting is mainly known as applied ethics, which strongly emphasize human business ethics, judgment, moral values, and their application in accountancy. Generally, the major ethical drivers of accounting are an appropriate practice and a good standard of professionalism. The ethical responsibility within the business world is not holistic but lies under the particular context of ethical behavior. A majority of the corporations globally have instituted ethical issues in the accounting processes, which increase the potential for conflict of interest. The breach of ethical rules within the corporate finance practice through financial misstatements usually damage an organization's reputations, customer satisfaction levels, and the trust of investors in the company, which this is the according stated to Mrs. Shusky and Troyes, which is published in 2006. Okay, let's move to the needs of ethics. The need for ethics in accounting, which is ethics are used to examine moral principles, human behavior, and then effort to distinguish between good and bad. The development of ethical code within organizations can secure the fidelity of business transactions and financial processes, which in turn affect employees' performance, relationship, and the credibility of the company. Due to the sensitivity of a company's financial, an ending of accounting ethics is necessary, as it is essential component of auditors and accountant duties in financial statement production. In general, the term of ethics refers to the morals or a code system that provides clear standard for determining what is wrong and what is right. Next is, I will explain about the roles of professional accounting bodies. The roles of professional accounting body is in promoting and enhancing ethics in the global accounting profession, which include investors, managers, and other senior management authorities that relies heavily on the timely and correct creation of financial reports prepared by accountants. Ethics in accounting also help to ensure the internal control systems are in line with requirements. Aside from identifying and measuring resource wasting, accountants can also undertake responsibilities that help develop policy making and detect the fraud inside a company. Not only ethical behavior harm individuals, but it also harm the reputation and credibility of a firm, which might which might lead to a fall in profit level. Okay, next is I will explain about the ethical responsibility that developing in accounting, which include the CEO, CFO, accountants, and auditors. I will explain one by one, okay? Firstly, the CEO and CFO is to identify and control fraud by including workers and upper manager in implementing internal control for financial resource reporting. It's vital for the CEO and the CFO to display honest and ethical behavior because the obligation of managing ethical concern lies on their mandate. They should address persist and real conflict of interest between their professional and personal relationship accordingly, because their purpose includes dealing with the ethical issue. It is important for the CEO and CFO need to represent truthful and ethical conduct. They should deal with potential and actual conflict of interest in their work and personal connection in a professional and personal manner. Secondly, an accountant is to ensure that the financial statement opinion is accurate with the framework of financial reporting to support accounting ethics. Lastly, for the auditor, that should ensure a high degree of confidence managing and controlling the financial statement to aid the user, such as investor and lender, in their decision making. Auditors should also help to collect sufficient and suitable evidence and to observe, to compare, to test, and to confirm the validity and fairness of financial report to enhance reasonable assurance. In addition, auditors help to understand and evaluate internal control system and support developing the procedures for performing analytical auditing strategies. Next is about recent occurrence of ethical problems. Ethical dilemmas are a common occurrence in the workplace and arise from a circumstance in which a group or an individual must choose between two possibilities. The answer is not necessarily needed in terms of black or white, or else right or wrong. Accounting ethics and their roles are critical for managers, investors, and even for small business owners to prevent financial and legal dilemmas due to financial statement deception. Next is I will explain about Code of Ethics. In the Code of Ethics, which is not everyone who works in the accounting field is trustworthy. However, daily violation of public and private trust occur, and resolving ethical dilemmas does not always end in the good ways. Following are 4 areas that deserve the attention of anyone considering working in the accounting profession. Firstly is integrity. To maintaining true and honesty in all commercial and professional dealing is a good example of integrity. As a matter of professional ethics, accounting must avoid any association with information that they believe to be irrelevant and misleading. Secondly is objectivity. Objectivity, internal auditors display the strongest levels of professional objectivity in gathering, evaluating, and communicating information regarding the activity or process being evaluated. Internal audits conduct a relevant fact and are not excessively influenced by their personal interests or by others in generating judgment. Financial advisors who get profit from selling one financial product over another may be biased in their advice to clients. So communication is the key in interacting with the clients. Thirdly, confidentiality. In confidentiality, internal auditors protect the value and the ownership of information they receive and do not release information without adequate authorization unless there is a legal professional requirement to do so. Lastly, competency. Competency, when it comes to providing internal auditing service, internal auditor used to their knowledge, skill, and experience. Next is problem in accounting ethics. First problem is the scholars has been unable to make definitive claim about the 2 most essential elements balancing accounting ethics, corporate rules of ethics, and individual personal belief. Secondly, it is difficult to determine whether the company culture or individual accountants or auditors' perspective on ethics has the most effect on ethical actions among accounting professionals. The third problem is it's challenging to identify the true determinants of accounting ethics among the professionals to comprehend what motivates them to practice and sustain ethical behavior in their position. Lastly, it is also crucial to highlight that ethics in the accounting profession is more than what a compliance obligation is, but ingrained an organization culture or an individual's mentality. Next is the impact of ethics in accounting on society. Ethics in accounting implies that financial statement can be helpful toward the end user in order to maintain the financial decision process. Accounting professionals are expected by business society regarding ethical standards and guarantees that all end users receive timely, accurate, and transparent information. False financial statements lead to damage to the reputation of the business. However, there are three consciously constructed false financial. Firstly is the impact on increased criminal and fraud activity. A lack of ethical concern by a company accountant open gap for auditors to engage in unethical conduct and conceal evidence. It gives rise to significant crimes like tax evasion and fraud due to extensive data changes. Thirdly is damage reputation of the business. Think expert engaging in unethical practice might damage an organization integrity and reputation. When a company's reputation has been damaged by unethical activity, it is harder to conduct the business. Lastly, is limited useful of financial statement. Accountants who engage in unethical activity are breaking the law, since they manipulate financial statement data. Financial statements have a lower legal standing, which impact the way decisions are made. Next is the rules and regulation in accounting. This rule focuses on establishing ethical principles within accounting businesses to ensure a decrease of ethical activity within the society. The correction of ICAEW's Code of Ethics is actively emphasized. This code was developed by the Institute of Chartered Accountants in England and Wales to promote moral or ethical behavior among professionals, and in their professional businesses activity according to SCCA Global 2016. The code contains guidelines that regulate professional behavior among accounting professionals in improving the financial market and providing confidence for financial information on which stakeholders and investor choices are based. It also to help to improve the equal distribution of resources to all stakeholders and to ensuring that it is contributed to individual accounting success as well as sustain and help non-profit organizations in their effort to achieve social and economic goals. Next is I will explain about earning management and ethics. Before that, what is ethics management? My view about this earning management is the process of manipulating the income to meet the company target. Earning management and ethics is financial ethics is commonly regarded as the accounting profession's most serious issue. When accountants and managers fail to follow the rules of earning management ethics, fraudulent actions occur in the financial system. Manager and accountant modify financial data in such instance. Change generally include predefined result in financial statement, resulting in accounts that differ from the real ones. Earning management is used to describe this type of earning manipulating. Earning management is used to describe this type of earning that manipulation in the accounting profession. It raises suspicions, especially when the fraud activity or data breaches occur. The social norm or organizational culture that connect earning management ethics significantly shape the standard followed in the company. Governance obsolete as vision and articles are taught in introduce ethical standard to financial institutions to reduce organizational tolerance for earning management level in response to the stubbornness of obsolete acts will result in significant gap between an organization culture and societal norm for earning management behavior. Furthermore, factors related to the direct involvement of managers and accountants in earning management are included in the professed control over the ethical behavior. Next is about the summary of the earning management and inappropriate accounting in Enron. According to Enron and Arthur Andersen, the two faced an extremely powerful scandal that ended in their bankruptcy. Enron and Arthur Andersen being the two heavyweights in the utilities and accounting sector respectively, to advantage of public and government entities and investors to gain their own wage with unlawful and immoral practices, including illegal and unethical activities. The Securities Exchange Commission (SEC) investigation indicates that Enron had participated in unethical conduct to misleading financial reporting. Essentially, the negative impact of false accounting within Enron brought to the businesses down. This led to improper accounting, severely impacting the value of the company's stock in the capital market and creating an indirect influence on its corporate reputation, doing the huge damage to its branding. Then, significant penalties were placed on the corporation and several rules surrounding accounting standards were enacted to bring more openness and trustworthiness to the company financial. The last part is accounting standard. 21st century has experienced a shocking and disappointing amount of accounting standards. Although the Institute of Management Accounting has produced professional ethical rules and This suggests a severe failure in management monitoring and reporting IMA. The company realized the failure they needed to truly evaluate the link between the accounting position and the accounting profession. As a result, organizations are examining the ethics of the accounting profession and putting more effort into producing employees who will uphold high ethical standards. However, these companies are committed to accounting scandals such as Enron, Tyco, and WorldCom. Enron scandal occurred in 2001, focused on hiding debt failure and dealing with the project. Secondly is Tyco scandal, which they don't disclose sale of stock and use the fund for personal interest. Lastly, WorldCom scandal, which is devastated cash flow. In response to those failures, it became apparent to organizations that a critical review of the relationship between the accounting roles and accounting profession was required. Organizations are now re-examining ethics in the accounting profession with a renewed interest in training and developing individuals to reinforce strong ethical principles and behavior. In conclusion, it is important to apply the ethics in accounting in order to improve corporate reputation and the usability of financial statements while reducing criminal activity and fraud. National professional bodies might incorporate ethical dimension into their ethical accounting standard. According to the studies, accountants' roles are influenced by the culture and accountability of the company they work for. Consequently, it is imperative that the government and the public governing bodies work together to promote and improve ethical accounting standard. That's all from me. I hope what I explained in this presentation will get the point about the ethic in accounting. Thank you.